Welcome to The Explainer. So, today we're going to crack open the latest US retail sales numbers. And believe me, what's inside is a pretty surprising and honestly a really critical story about the American economy. So, let's just dive right into the central puzzle. You've probably felt this, right? It's a puzzle that a lot of people are grappling with. You look at the official data, and it seems to be saying one thing, but then you look at how people actually feel about the economy, and it's pointing in a completely different direction. So, what's really going on with the US consumer? All right, our investigation is going to start with those big headline retail numbers that get all the attention. And, on the surface, they look pretty good, kind of encouraging even. But the real story, yeah, that's hiding just beneath the surface. Okay, here is our very first clue. The headline number says retail sales went up by 0.5%. But that figure is, well, it's pretty misleading. Because once you factor in inflation, what things actually cost, the real growth in what people could buy was just 0.2%. Think about that. People are spending more money, but they're getting almost nothing extra for it. It's like running in place. So, this illusion created by inflation, it leads us straight to the heart of the mystery. Because when you start asking who is actually doing all this spending, you discover something fascinating. The US consumer market, it's not one big happy family. It's dramatically splitting right down the middle. And check this out. This data really shows a massive gap. For low-income households, spending grew by a tiny 0.6% over the year. That's actually less than the rate of inflation. But look at the other side. Spending by high-income households, it jumped 2.6%. That is a huge difference. So what's the engine behind that spending gap? It all comes down to wages. For lower-income workers, wages grew just 1.3%. For high-income earners, 3.2%. I mean, that disparity is the widest it's been since early 2021, and it shows this clear split in who's getting ahead. So you might be asking, what's fueling all this spending from the wealthy? Well, it's a powerful force that economists call the wealth effect. It's pretty simple, really. When your assets, stocks, your house, go up in value, you feel richer, you feel more confident. And what do? You open your wallet and you spend more freely. Okay, so this brings us to the crucial point. If the vast majority of people aren't really spending more, then who is actually driving the entire US economy? The answer is pretty startling. The whole thing boils down to a single number. A number that honestly changes everything you think you know about the US economy, 50%. So get this. According to a really stunning analysis from Moody's Analytics, the top 10% of households now account for half, a full 50% of all consumer spending in the country. Just let that sink in for a second. 1/10 of the people are spending just as much as the other 9/10 combined. It's wild. Now, this didn't happen overnight. It's a trend that's been building for decades. You can see it here. Back in 1989, the top 10% were at 36% of spending. By 2019, that was up to almost 45%. But then the pandemic came along and just poured gasoline on the fire, pushing their share all the way up to that 50% milestone we're at today. And the flip side of all this concentration at the top? Well, it's stagnation for pretty much everyone else. That same analysis found that for the bottom 80% of households, their spending has only gone up at the same pace as inflation. What does that mean? It means zero real growth. Their actual purchasing power, what they can truly afford to buy, has gone completely flat. Okay, so we've kind of peeled back the layers and uncovered the hidden structure of today's economy. And it's like a skyscraper, right? But one that's being held up almost entirely by the top floors. So the big question we have to ask is, how stable is a building like that? Well, Mark Zandi, the chief economist who did this analysis, he puts it very bluntly. He warns that the entire economy is now, and I'm quoting here, tethered to the fortunes and spending of the affluent. I mean, that creates a really fragile foundation, doesn't it? The health of the whole system now hangs on the confidence of this very, very small group of people. And this dependency creates a very specific and pretty dangerous risk. Remember that wealth effect we talked about? Well, because the spending of the wealthy is so tied to it, a big drop in the stock market could set off a domino effect. Like this. The market falls, the wealthy feel less wealthy, so they stop spending. That hits company profits, which could push the market even lower, and boom, the whole economy grinds to a halt. We're already seeing this play out in the real world. It's creating a clearer set of winners and losers. On one hand, you have companies that cater to high-income folks. Think Delta, Royal Caribbean Cruises, luxury brands. They're doing great. But then you look at retailers focused on middle and lower income families. Stores like Kohl's, Macy's, Family Dollar, and they're really struggling. It's a tale of two economies. So, what does all this mean when you put it together? Let's break down this new economic reality we're living in. All right, let's wrap this up. The big takeaway here is that the story of the US consumer isn't about averages anymore. Those headline numbers, they hide what's really going on. We're in a K-shaped reality. One group is going up, the other is going down. And it's created an economy that's dangerously dependent on the top 10%, super vulnerable to shocks in the stock market, and honestly, a world where the idea of an average consumer, it just doesn't exist anymore.
And all of this leaves us with a really critical question, not just for the economy, but for society. When your entire economic growth is being held up by such a tiny slice of the population, is that really sustainable? Can that actually last?
And that's where we have to leave it for this deep dive. Thank you so much for joining us on The Explainer.